What's up, people? Welcome or welcome back to Invest with Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, NEO, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So earlier this year, January 10th to be exact, I posted this video on Tesla titled, Tesla isn't slowing down. And during that video, I give the many reasons why I believe that Tesla had room to grow with my price target for year end. And at the time, this is what I said. We know that as of the end of 2020, Tesla now has, between Giga Shanghai and the Fremont factory, a capacity of 800,000 cars that they can produce a year. And also Elon mentioned that they were planning to grow their deliveries by 50% year over year, meaning that at this point for 2021, we should be expecting something like 750,000 deliveries. And currently we're sitting at $800 for the stock price. And there is obviously a lot more that goes into this, and I'm oversimplifying it. But between all these catalysts, the fact that they're executing, pretty much flawlessly at this point, I can easily see with double the capacity that the stock price will make its way to the $1,400 mark by the end of the year. The beauty of YouTube is you can always go back and see what you said and see how accurate you were. The stock is now up 61.13% and at the top hit $1,243.49. Holding through the volatility all year wasn't easy unless you did your research and realized that Tesla is truly a transformational story with decades of growth ahead. What was obvious to me and many others is now coming into full focus for Wall Street analysts, right? Price targets by the pros has been consistently re-rated upwards as the year went on. Philippe Bourgeois was the first one last week on the 8th to raise his price target to finally match the 1400 target I had at the start of 2020. Dan Ives from Wedbush has now also raised his price target to 1400 as of this Thursday, November 18th. So in today's video, I'll play you some clips from Dan Ives on the why for his new price target. I'll add some commentary along the way and wrap up with a weekly portfolio performance review expressed in percentage gain or loss. I'd recommend watching all the way through so you don't miss out on any pertinent information. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support for the channel and help it grow if you appreciate the content. All right, let's get into it. So for those of you not familiar with Dan Ives, you can see his tip rank profile here. He's been bullish on Tesla and has gradually raised his price target throughout the year. His base case now sits at $1,400 and his bull case at $1,800. Let's take a listen.
Why now is the time to come out and say that Tesla's going to make this next push?
Yeah, it's because of all of our checks and focus on the China market. I think right now China is accelerating going 2022. And I think that's worth $400 a share of the Tesla story. I think they're going to continue to be able to accelerate that. That could be 40% of deliveries next year. This is really a China-driven in price target increase, but also in terms of what's going on across the world. I mean, we're seeing this green tidal wave play out. It's a $5 trillion market, and I think a further re-rating in Tesla continues to happen.
At the time of the interview, the stock was trading around $1,100, and Dan's comments, if you missed it, assigned $400 just for the amount Tesla could sell in China next year. You have to remember that at the close of Q3, Tesla had a total installed capacity of around 1 million cars between the Fremont factory and Giga Shanghai. Tesla assigns a capacity of over 450,000 for Giga Shanghai, but the reality is the factory isn't fully built out yet. And ultimately, Tesla is capacity constrained, not demand constrained. That's precisely why they've turned Giga Shanghai into the global exporter for Model 3 and Y, supporting the rest of the world, while Fremont is primarily focused on supplying the US market. Total deliveries so far this year stand at 627,572 cars. Assuming that Tesla only manages to deliver the same amount as it did in Q3, they would close the year at 869K cars if you round up. And with the minimum of 50% year-over-year growth Elon has committed to, we'd be looking at 1.3 million cars expected to be delivered in 2022. Even if Tesla had a bit of trouble ramping up next year, achieving this number with the insane demand they have and 2 new factories coming online should not be an issue.
Dan, why aren't you fazed much by Elon Musk selling down his stake?
Well, we always assumed he was going to sell 5 to 6%, just given the call it 12 to 15 billion tax bill coming. Now, the fact that he did it in a Twitter poll, that could only be one company and one CEO that ultimately does that. But from a PR perspective, I mean, that I think ended up being a win. because if he just started selling stock, indiscriminately and without sort of notifying, this is a stock today that could be $850, $900. But Musk is part of the cachet and part of the genius that is Tesla. And that's what they've built. And right now, you're seeing this sort of market share gains accelerate, but it's not a zero-sum game. I mean, GM, Ford, Lucid, others are going to be significant beneficiaries in terms of how we sort of see this accelerating into the next 12 to 18 months.
Ultimately, the one thing to remember here is that these are shares that Elon had to sell regardless by next summer, or he would have lost them forever. Personally, I think the timing couldn't have been any better. It created an opportunity for a healthy pullback, strengthened the base, and turned the $1,000 mark, which was previously resistance, into strong support for the stock moving forward. I think they're all wins, and for anybody that was waiting to get into the stock, that was a great entry point.
Well, and all those other guys are a lot cheaper, like in terms of valuation, in terms of just absolute stock price. I mean, why not counsel investors to maybe buy the ones that have more upside?
But I think when you look at the pure plays, and you've seen it with Lucid, you've seen it obviously with a lot of the excitement of newcomers coming out. And of course, you see it in Tesla. These are really growth transformation stories. I don't view them as auto stocks. I view them as disruptive technology players. And it's an arms race in terms of what I view as the biggest transformation to the auto industry since the 1950s.
And that right there is the main distinction. Yes, you can buy the GM stock and other legacy automakers, but none of them are bringing its type of innovation that Tesla and NIO, for that matter, are bringing to the table. Not to mention that they just don't have the scale to catch up to Tesla at this point. And if you're thinking to yourself, well, Rivian and Lucid will surely be the next Tesla, understand that they simply do not have the scale. To put things into perspective, Rivian aims to produce 1 million cars by 2030. Tesla will be making over that amount just next year, and they are only going to accelerate, right? So it's just not apples to apples here.
Dan, a tweet from Ford CEO Jim Farley caught my attention last night. He said, quote, "We are now expecting to produce 600,000 EVs a year globally by the end of 2023, 2 times our original plan." I mean, Farley at Ford is absolutely fired up. I mean, does Elon Musk need to be worried about what Ford is cooking up?
I mean, Farley's done, he's had the golden touch so far. And I think you could also say for what Mary's doing at GM, but they're diving into the deep end of the pool on EVs. That's what Farley's doing. And that's more and more what the re-rating is going to be in terms of, they could even lose share in traditional ICE. You gain in EVs. This is a stock that could go much higher. And I think that's a smart move in terms of the conversion opportunities we're seeing. I think the Biden infrastructure bill, from tax credits to charging stations, that's just the first step in what's going to be this massive green tidal wave playing out.
Again, you see here, the target Ford is putting out there for 2023. To put it simply, they're trying to produce in 2 years what Tesla is doing currently in 3 quarters. Just no comparison. We're just now hitting the inflection point for the EV mass adoption, and there's a reason why fleet operators like Hertz, Uber, Yellow Cabs in New York, and others around the country and the world are choosing Tesla vehicles. Number one, they're the only company with the scale, range, and charging infrastructure to support that level of operation. And two, which is even more important, full autonomy is the holy grail for fleet operators. Tesla is in pole position to unlock true autonomy, and with a flip of a button, the entire fleet can be upgraded into robotaxis. The reality is, it doesn't make sense for every automaker to try and create their own in-house software stack for full autonomy. It's just too cost intensive, and the amount of data needed just won't be able to be collected in a reasonable amount of time since they lack the fleet size today, right? So really where we're going to find ourselves is you're going to end up with a handful of systems out there. Tesla, Intel Mobileye, and likely Apple, would be my guess, will license their tech to everybody else. All right, so for this last clip, let's hear from Dan on his $1,800 bull case and why that is.
I mean, the $1,500 price target itself was the bull case just a couple of weeks ago, predicated on some pretty strong earnings per share and a pretty high multiple as it is. So how do you get to 1,800?
Well, I think a lot of it, you got to look at some of the parts. And I think when you look at these transformational growth stories, the Amazons, Netflix, and of course, Tesla, looking near term at earnings, I think you don't see forest for the trees. I view some of the parts. And then you look at what's going to be a $5 trillion market that they own 80% of. This is a company that into the next few years, I think EV could go from 3% of automotive to potentially 10% in the next 2 to 3 years. That could be $25, $30 of earnings power. for Tesla. But for right now, we continue this as a name that has significant upside into the next few years as part of what we're seeing in EV. And I think Tesla continues right now, at least in EV land, it's Tesla's world. Everyone else is paying rent.
As it's just shy of $1.2 trillion as we're here chatting.
That about sums it up. And remember, Dan is a financial advisor. Granted, it took him forever to catch up to my non-professional price target, but hey, better late than never, right? So listen to his recommendation and you probably will see some gains there. All right, so with that said, let's switch over to the portfolio review expressed in percentage gain or loss for the week. And the biggest driver for the portfolio decline this week comes courtesy of NEO, Virgin Galactic, and the crypto space. Each of them were impacted by larger macro news instead of specific issues tied to them. I'm still very bullish on each one of them and actually took the opportunity of this dip to buy more Bitcoin in Virgin Galactic. I started the week in green territory by 0.87%, only to tumble all the way down to 11.23% in the red. Bitcoin, Ethereum, and Tesla have since bounced back and helped close the gap. Ultimately, I posted a loss of 4.35% for the week. And as I said, great buying opportunities have presented themselves as a result of this little speed bump here. I'm still expecting upward momentum to resume in the coming weeks here. And on that note, I'll leave it here for today. If you enjoy the content, make sure to smash the like button and share with others who you think could benefit from it. For my newcomers, remember to subscribe and don't forget to ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and now also target one additional in-week video for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.